Thanks a lot for tuning in today. If you've never heard anything about us, we're going to teach you a lot of great things today. Maybe some things you didn't know about flood zones and how flood zones can be, in some cases, a great value add, to your property's, value potential. My name is DJ McClure. I'm our VP of Business Development. Been with the company since some of our early days. We're almost an 11-year-old company now. And so I really look forward to sharing some great information today. Thanks again for joining. Some quick housekeeping. Really look forward to having hopefully a great Q&A at the end. So if you have any questions, maybe jot it down or, just put it into the Q&A. I'll be monitoring that and then we'll go through all of those for sure at the end. And then additionally, I've got a giveaway. So please stick around. We'll keep this to a tight hour at the longest, hopefully even a little bit faster. So let's dive right in. So just to give you a quick agenda, kind of what we'll be going through, I'll give you a bit of information about who National Flood Experts is, what we do, who we service, and where. We'll talk about some of the common problems with the flood zones and what they create and what's changed and how that's affecting, the commercial real estate space. We've got a solution for everyone. So I expect if you're tuning in today, you have probably run into a flood zone at some point in your real estate career. So, we probably have some owner operators on today. I know we've got some folks that are in adjacent industries, insurance, brokerage, lending. We've got some developers on the call. So we've got literally something for everyone that can be a benefit to anything you're facing flood zone related. We'll go through some case studies. I think that's always a great way to really be able to see kind of some of the tangible benefits of some of these projects we'll talk about. And the next steps, if there's something that caught your ear and you'd like to continue a conversation, we would love to, understand what you're facing and how we might be able to help. So who is National Flood Experts? Our company was started with the idea of how do we help bridge the gap between, all these different siloed industries, engineering, insurance, and real estate. And, so our founder, having had worked on both sides, he is an engineer by trade, and having worked in the insurance space, we realized there was, a large underserviced area and bridging those two worlds, and then really being able to map out all the different stages of the real estate life cycle, and how we can help. And so, today, like we're very proud. We've been fortunate to continue growing over the years. We're over 30 million in cost savings that we have helped our clients realize. And, for the average cap rate, right, we're well over 500 million in value we've added. So we look forward to being able to do the same for you. We look at thousands of properties. And for all the properties we look at, we find a cost saving solution and benefit on almost 50%. This 45% has stayed pretty consistent in all of our years as a company. And in thousands and thousands of projects, we really have found lots of different ways to help lots of different solutions. You'll find that the way we look at the scenarios are a little bit different, and being able to, creatively go in and apply all these different knowledge bases in one line of thought to help find the maximum savings and value creation for whatever project you may be having. So, we could probably break our solutions really into two categories. We're identifying cost saving solutions that largely are related to the flood insurance requirement that the flood maps across the country, mandate. And so one of the biggest things is that the flood maps aren't perfect and the lenders have a federal compliance they have to follow. And so if we're able to change the flood zones, then it removes those requirements. So there's lots of different types of flood zone projects we'll talk about. And then again, in bridging these worlds together, really understanding the cause and effect between how the engineering data and how the carrier is actually rating your property and really being able to audit all of these variables. That's how we go in to negotiate a better rating and lower premium for you on your buildings. And so those two categories, that is where we've historically been very successful. And we've continued to branch out, heavily now with the development side and all the different modeling and regulatory requirements for new construction. So you can really see the entire life cycle. There's something that pops up with the flood zone, whether it's in a new acquisition, maybe you're restructuring your debt, or you're prepping a property, to get the max value at sale. So when we really look at it, Some of the problems that the flood zones create from the beginning, right, which is the most obvious, is the flood insurance requirement. Now, as it feels that these lending groups, have a very strong opinion about this, in reality, they're just passing down a compliance requirement that is by law required of them to make a stipulation of the closing. So that the lenders don't get in trouble and fined, they have to make sure they have proof of flood insurance on their lending notes. And so some types of loans, they're only going to require, what we would call the NFIP max, which is that 500,000 maximum coverage per building. You get into some of the different, specialized programs on the agency side, maybe even HUD, some of these requirements can really elevate. And there's been some changes here, so we'll talk about that as well in a later slide. But these agency programs, they typically want to see full replacement values. They want business income. So we've seen cases where someone's paying 10, 20,000 a year for these standard type requirements. The refinance might push those costs well over 100,000, sometimes even into that $250,000 and up range. So again, some of these solutions with changing the flood zone and getting these requirements removed. I mean, I've had conversations with investors that said they're 30 years in real estate and didn't know that was possible. So I hope we have a few of those in the audience today. You're hearing some of this for the first time, or maybe you've heard this as something, but you didn't really know, how it worked and what the effects are. And then, for developers as well, there's a lot of regulatory things that are changing with the municipalities wanting to really update their flood maps at a faster rate. But since the counties can only move so quickly, 10, 15 years in most parts of the country, they are passing on some of these requirements to the individual developers, so that way the modeling can be as up to date as possible, as fill and drainage infrastructure, all those things move way faster. And so this has definitely required that these developing properties do a lot more flood modeling, and some of that has to be formalized with FEMA. So, a lot of things are changing and it's adding costs, it's adding delays. And so, being able to be kind of a one-stop shop for these is really what we, pride ourselves in. So when you start getting into, like in Tampa, we had several hurricanes the last few years, so you do run into, a 50% rule, which really is to where you can't improve the value of a property more than 50%, or else it has to be up to date with, local flood zone permitting requirements. And so for some of the older properties that were built before there were even flood zones, they have really the option of tearing it down, or they could lift it up. We have seen a few properties in Tampa where they did just completely lift the building. And so it kind of puts some handcuffs on you, but there are some situations where those particular buildings may have characteristics to where we can get the flood zone change for them, and it would then remove those constraints. So, when we're really talking about, if you've looked ever at buying a property and you came across the flood zone, you may have walked away. And so if we can help increase the value, increase the buyer pool, right now we're in obviously a very unique timing with there's a lot of capital that's looking to be placed. There's a lot of properties that are maybe at the end of the road with the lending extensions they were given. So, some of these flood zone properties could have some dramatic hidden NOI if you can attack it, from the early stages. So here's a pretty common scenario that we see. You can see the flood zone here in blue, as it's just barely touching, some of these buildings here. Those are the buildings that are going to get required for flood insurance. And even though it's just barely touching the buildings, that is where the compliance requirements begin from. So the lenders have, a third party that does a flood zone determination review. And if that document identifies any of these buildings, it's basically set in stone until we get a formal document from FEMA to correct that. And we'll talk about what that document is, here in a minute. But, this brown area here, this is the 500-year flood zone. And then you can kind of see this unshaded area off to the right. That would be the unshaded flood zone. These are zone X, where typically they've not had any flood insurance requirements before. There are some things changing with that in the storm surge areas. That's brought some new flood insurance requirements that we've never really had to face before. So, this is in Houston. It's an area that we do a tremendous amount of projects, almost weekly, it seems like. But this is all across the country. So we've done projects, I think, in 48 states now. So rivers, streams, creeks, drainage ways, downtown Los Angeles, where there's not even a water source close, where it's more drainage related. So there are flood zones everywhere, and you'd be surprised sometimes where these things pop up. And so I want to show you also some things that might help you understand, the National Flood Insurance Program a little bit more. So FEMA's insurance program is really the balance to these requirements. You can always get a policy through the FEMA's insurance program. You may not like the price, but it is an option that should always exist, at least for that first layer of coverage. So we have a situation right here. This is a client, that with FEMA's new system, they actually tell you what the maximum premium cost is, this full risk premium here. Although as properties carried over from the old system to the new system, they didn't jump everyone's premium from what they were paying in 2021 to this new maximum. They gave them this cap discount here just below. And so you can see here what they're paying at this 104,000 is less than the 157, but what that means is that they're going to increase every year on a glide path until they eventually get to this full risk premium plus the fees that are down below. Now, here's another example of a different type of pricing situation where the full risk premium is only 34,000. And you can see once some of the fees are on top, they're paying, now 43. So in this case at the bottom, they've basically reached their maximum. They're going to stay the same. Now, why do I mention this? Because, everyone is trying to forecast what are their rents going to do every year? What's their insurance going to do? And so really understanding your flood insurance situation can help from, an underwriting and forecasting standpoint with your deals and knowing, okay, am I the top scenario where I am going to keep increasing every single year? And I need to factor that into my NOI calculations within the business plan, or have I reached my max and I really shouldn't see much variation going forward? So in talking about, agency debt specifically, Fannie Mac, or excuse me, Fannie Mae and Freddie Mac are the most common, refinance options that particularly habitational, I see, probably some in the other asset classes as well. Historically, they've really only been concerned with, 100-year flood zones, and then they've been flexible to some degree. If they look at the building values and the replacement value is, let's say, 30 million, once you factor in, how much the business income values are as well. And then your insurance agent goes to market, and because of where the property is, maybe some of the pricing options are just completely exorbitant, or there may not be options even that exist. So if the insurance agent could show a really good faith effort, you may be able to negotiate down, some of those limits. And unfortunately, what we're seeing in the last 9 months is that the agency is really going away from any of these waivers. In fact, we've had clients that came to us that had waivers from previous years, and at the loan anniversary, the compliance teams have come back and said, hey, listen, we're going to need you to provide proof of flood insurance for that 5 million or that 9 million, that we'd given you a waiver in years past. So what does this mean? Well, it means that some of these past loan anniversaries coming in may bring, some new flood insurance requirements. And so the best thing you can do is have, a team like ours review this property to see, can anything be done for the flood zone? And we'll talk about some case studies, but on this example specifically, we had a client that we worked with where we could only remove about half of the buildings on the property, but that was enough to get the limit requirement reduced to where they didn't have to go to market for an additional 9 million, because that 9 million was going to cost them an additional 60,000 in premium every year. So for most properties, right, we're talking $1 million swing on the overall valuation. So, this is something that's definitely going to be popping up. It's hard to say, is it going to be your first, loan anniversary, or will they not get to your file until maybe next year? It's hard to know. But I would say if you're in this situation, you've got a Fannie or Freddie loan, it's in a flood zone, you definitely want a team like ours to look at this to see what solutions might exist sooner than later. One of the other things that's changed on the agency side, like I was talking earlier, are these tier one storm surge areas. They are bringing some additional requirements. So where we've been able to get, letters of map amendment, which we'll talk a little bit more about in a second. If we're able to get those done, if we can get the property to this, what's called an X unshaded, which is outside of the 500 year even, it does remove those requirements. So this isn't going to affect all properties in the X500 area. You're talking mainly, your coastal, Gulf, East Coast type areas, where we've seen this the most commonly. So if you have inclusions on your property program, some of that will prevent additional flood insurance from having to be required. But again, this is something just to be wary of if you are an operator that's acquiring, in some of the coastal areas. So, one of the first solutions that we'll talk about that we do the most, I would say, one of the highest volumes in the country, I would venture, is these letter of map amendment type projects. And I think sometimes these kind of get a little marginalized, but really understanding there's so many different scenarios that it helps. And there's also so many different categories of these and different nuance experience that helps our team be able to qualify a very high percentage of these projects. And so a letter of map amendment is basically proving that a set of buildings can be excluded from the current flood map. Now, it won't make the flood map look any different, but from a flood zone determination standpoint at your lender, it'll then show that these 5 or these 10 buildings are no longer considered to be part of the 100-year flood zone. Thus, they are no longer mandated for any of the flood insurance requirements. And this is for the life of the flood map. So it's not like it's something you have to relook at every year. And again, the flood maps, they only update, every 10 to 15 years in most markets. Even some are lesser frequent than that. You can do a simple Google search, FEMA flood map, and the MSC link will come up to where you can put in your address and locate if it's in a 100-year flood zone. Now, there are more complex and more involved projects, which is called a letter of map revision. And this does change materially what the whole flood map looks like for a defined area. These are typically larger than just one property. They can be, for various reasons, performed, some of which can be required, like from a new development. In some cases, there could be a major infrastructure improvement in an area, and a private engineering group like us or some other, is then taking all of those new factors, incorporating them into the flood map, formalizing this with FEMA. So then the flood map recognizes all of those improvements. Now it changes either the flood elevation, it could change where the flood 100-year zone starts and stops, can make a lot of changes, can make a lot of improvements. That process, just to give you context, it could be something 6 to 9 months, potentially longer, depending on how large the geography is. Whereas letter of map amendments for our team, in some cases, these can be 1 to 2 weeks approval for certain scenarios, but maybe 4 to 6 weeks in others. So it's a very streamlined process. The qualifying stage for us, is usually only a few days on the feasibility. And again, because this is all we do, this is something where, if you're going to, a surgeon, you want to go to a surgeon that does, your type of scenario every day, not someone that maybe does these things only every once in a while. And so kind of giving you an idea between the two, like you can see this example on the left, there's various map amendments. You can see these purple dots. And then, here on the right, you can't really see what the before looked like, but that blue outline area, that is the geography that letter of map revision was factoring in. Again, it could have been that this waterway, capacity was expanded. There could have been something built to the north that expanded culverts. It could be DOT related. Could be any number of factors, where when all those things are put into the flood map formula and the software, it made a change to the flood map. And then in formalizing that, that letter of map revision supersedes the county level flood map that was in place before for that area. So again, different solutions for different scenarios. Sometimes we find that a property was built kind of in the limbo period from when the previous map was updating, but because of when the data cutoff was, they didn't incorporate all the improvements that your development, had made, and we have to go in and manually incorporate that because ultimately you're going to be held to these flood insurance requirements for the entire life of your loan. Um, and then if we can make a change, then you can realize those savings and those value impacts immediately. And then just a quick question. Yes, this is being recorded. It'll be sent out likely tomorrow to everyone as well. So let's get into our first case study. This particular client, you can see there's a number of buildings, here within this like central area that was being required, for flood insurance. So when you're looking at this, again, the refinance scenario, the limits, being over 100,000, just because of how much the replacement value and those things were being calculated, this was a dramatic swing. And so when you look at this over the course of the portfolio, where for this particular client, we found over 50 buildings that could be removed, from the flood zone just on one particular property that was the priority. Those 10 buildings represented just 100,000 in savings by itself, not even incorporating what that meant for the rest of the portfolio. So for certain situations, this can be, I mean, dramatically, an improvement in the value. And so again, for a process like this, because this was a little bit older property, we were able to actually get this approved in, I think, under 2 weeks. And then at that point, they take that document, has the federal case number, all the legal description details, etc. They take that to their loan servicer. They ask them to update the flood zone determination document on file. And that's really it. It's pretty black and white. That's what removes these requirements, going forward. And so this could be pre-acquisition. This could be something you've owned for a number of years. This could be a scenario where you're thinking that in 2026, you may be looking to refinance. Let's get this taken care of, as soon as possible. So that way, any of these different scenarios, you're in the best possible position. I think we work with a lot of operators that are in a position where they're like, I'm not looking to sell, I'm looking to hold this, but unexpectedly something happens, or you get approached by someone with an offer, and there you go. You're ready to go from the get-go. So like I said, the flood zone solutions, that's one of the major categories that we're operating in. Primarily, we're not charging anything to review these projects on the front end because honestly, we don't know going in what the data will allow us to do. Now, we do have, prices for these different types of projects, kind of based on, some of the savings impact, that we're making, or depending on a particular scope, if it has some unique complexity. But the initial review, there's really nothing to lose there, because you're getting a high level expertise audit that will identify any and all solutions. And so if the flood zone is something we cannot improve, then we start looking at the actual flood policy itself. Now, because FEMA's flood insurance program has a set of guidelines, it doesn't really matter what the carrier is that's writing it. So to use the same example before, where this client had a full risk premium of 157,000, we were able to go in. Our team has the ability to splice down all the rating characteristics. We built a software to kind of model, if you will, FEMA's new system that was built in 2022 or released in 2022, better said. And so what our team is doing is we're actually splicing down all the variables. We're trying to understand what are the major multipliers that are contributing to this full risk premium number. And then if we find situations where we can either better represent the building, we find that there's better data, or that there was perhaps an inaccuracy, because FEMA's program, they aggregate a lot of different data sources, and it's hard to expect that anything is going to be perfect or always current. So in this audit that we're doing, we're running scenarios and we're looking to see how could we improve the rating of this property and this set of buildings to lower this full risk premium number. And in this particular case, this was the same example I showed you earlier, but we took this full risk premium from 157,000 down to 34,000. So this actually produced a pretty substantial refund for this client because they were renewing within the next few months after we had looked at this. And so this actually reduced their renewal premium, by, quite a bit because this 104 was increasing at an 18% rate up to about 120,000, so this was close to a $90,000 savings that this client realized at the renewal immediately. In this case, they actually even received a refund back from the carrier. So this is a little bit more of an extreme number, but this would be obviously a huge win for any property. Um, Now, in doing this review, we were looking at the flood insurance declaration pages. Those are typically like the common denominator that every property has. We try to get some survey or topography elevation documents, anything that you have prior on file. Elevation certificates are typically the most common. Sometimes we can get topography surveys. Sometimes we can get the civil plans from when it was built. Any of those things that you have, any or all or none, and we'll still take and we'll be able to pull some additional information on our side to do some feasibility, figure out what solutions may qualify. And then in some instances, we may need to visit the property. And so that's not so uncommon, probably about a third of our cases. But we do identify before any kind of site visit, and this is what's also very unique about at least how we approach these scenarios, is that we want to have an idea of what the before and after would be before we even go to the property. And we want to know what's our percentage confidence before we're going to ask a client to pay anything up front for us to travel to a property, because we do all that in-house ourselves. So if it's 80%, we're going to tell you we have 80% confidence. And if we have 10% confidence, it's a long shot. We're going to tell you that also. Some instances, the pricing is so high that, it's even worth spending, maybe couple thousand, depending on where it is in the country and how many buildings, for our team to go investigate further, because some of those long shot scenarios do surprise us. We do track the success of all of our field work, and this is averaging in the home runs and the long shots. And about 70% of the field work that we do does result in us finding the data to get to a positive solution. So this is important because there's been a big black box around FEMA's flood insurance program since it's come out, and our team has really cracked the code here. So any flood insurance policy, big or small, is definitely worth, our team looking at here. So again, this is a year over year savings. That's the best thing about this, is that they've now reached their new maximum. So from a forecasting standpoint, they know where they're going to be, price wise the next, several years. So let's switch gears. We probably have a few developers on the call, like I'd said, so we're definitely disrupting and kind of changing the way people think about, development versus how it's been done in the past. Traditionally, developments, you're looking at a set of permitting requirements, potentially limitations that come from that. And then, you're trying to design the project in a way to where it can move forward as quickly and efficiently, because all that time is cost. And then how do you get as quickly to the certificate of occupancy so that you can start generating revenue off of that, development. And so we are trying to shift, all the developers that we know and that we're meeting, to a more proactive way of thinking. And so this really leads us to kind of go beyond what this typical, line of thinking is, because, again, and our president's an engineer, he said it himself, engineers are trained to make sure the project is developed in a way that it meets permitting standards. And their training does not involve anything with understanding what are the insurance impacts long term for how that property is being designed. And so by, again, overlapping these, into the same line of thought, this takes us into the question, well, how do we engineer out of the problem? How do we engineer what we want the flood zone to look like post-development, and what would that take? And is it possible? This goes beyond the cup for cup, type mindset. Whereas if I bring in, however much cubic feet of fill, I've got to take it out somewhere else, just talking basic compensation, looking at the model is how do we model this scenario to where it would, help us get these buildings or a portion more of the acreage out of the 100-year. So maybe you can add one more building, or maybe you can add more parking, whatever the problem that the flood zone is creating, how do we get to a solution? And so our sole focus is to turn the flood zone liability at that point into a value creation opportunity. And the way we've done this is we've actually been partnering, with other engineering firms. We're not doing the site design. we're doing everything that's flood related, and we just take that off of their hands. And we have found this to be a very, very promising model, very productive. In fact, a lot of those engineering firms tell us they don't enjoy doing the flood side, the modeling, the having to interact with the municipalities and with FEMA. And so where our team is doing this every day, this is the difference. And so we partner with these firms. We help look at these deals pre-permitting so that we might be able to point out a blind spot of perhaps some minor changes, or if it's even earlier than that, we might even be able to then do some pre-modeling, to where a site that looked less than desirable might actually show that it has some potential. It may take some work on how the drainage is redesigned and all those factors, but at that stage, then it becomes a question of ROI. Does that work for what that's going to cost to execute? And the timing, does that balance out to where the value that you're going to receive long term, which we can help you calculate, is the value higher than the costs? And I think for most of us as investors, that's always the question we're asking ourselves with any type of value add, type, whether it's CapEx or anything, does it generate more ROI than it costs? So then we're handling, how do we get to the simplest and fastest solution to maximize the most number of buildings out of the 100-year or the most acreage additional that can be developed. So this may be that we can go that letter of map amendment approach, or it may require us to go through that MT2 process, which is the letter of map revision that I was describing that, really takes it, to be closer to, that 6 to 9 month, type, process. So, we're looking at a scenario like this where this client was, looking to continue finishing their development, but the municipality has kind of tightened their requirements, and they have since said that, they would like the flood zone to be modeled. And so requiring, that this northwest area of their property, well, we have to go in and take all the infrastructure that was done in the initial phases. We have to take everything they're doing in this last phase, and we have to model all this out and basically redesign, what the flood map's going to look like after. Even in this case, it's going to be a neutral impact, but, for a lot of these counties and cities, they need to have a little bit of a CYA in some ways. How do they have documentation that these developments are not worsening the flood zones? And so a lot of these areas are now requiring anything over 5 acres or 50 lots that they go through this modeling process. Excuse me. As part of the construction requirements. And so we're handling this portion of the project in an effort to not delay their CO later in the development stage. In other cases it's proactive. In this case it was unfortunately reactive, but these are the scenarios that we're seeing more consistently around the country. This has started heavily in Florida. We're already starting to see this in other states. They are operating under the same national guidelines, but what you find, there is a slight bit of subjectivity in which areas are choosing to enforce this more frequently than others. So, kind of to kind of bring this all together before we get into like how our process works and some case studies, at the end of the day, it's about proactivity, and it's how do we bring, solutions that will affect the long-term costs of the flood insurance, from an engineering, standpoint, because typically, and we work hand in hand with, I would say at this point, thousands of insurance brokers around the country. They're working with the information that they have available. And same thing for, like I was talking about with the engineers. Everyone's doing the best with the information and experience that they have. So bringing these worlds together, this is where a lot of these solutions really originate from. And so how does our process work? I think we had a question a little bit about that earlier. The engineering review, like I said, is a complementary process. We spent, just dozens and dozens and dozens of hours for our clients. Could be a property they're looking to acquire. It could be for some of our insurance partners, current or prospective clients, where we're going through all this data because we know statistically we're going to find solutions on 45 to 50% of the ones that we see. So we know that it's worth spending the time so that we can find solutions that otherwise may never have gotten found to help our client base. And so any of these reviews that we do, sometimes we find a solution right away. We're ready to move on it. Like I was saying earlier, in some instances, we do have to get some additional data, or we might need some clarifications or any of those things on site, and we'll give you, a tremendous amount of transparent thoughts and information, to help you make a decision if that cost is worthwhile. And there are situations where we just can't help. And at least then, you've kind of turned over every stone, for that particular property. So, again, it's something that we really enjoy doing. After we go through this process, it's really about having a discovery conversation with you. We want to really understand what's your unique lending situation, what's your plan for that property, what issues have you had in the past, what do you hope to, achieve in the future, because in some cases the solution may be qualified, but it may just not make sense for your particular timing. Or this could be a solution that's tremendously valuable and we want to move on it as soon as possible. So, if that's the case, we move to a contract and then we have a full guarantee on all of these projects. The developer situations are a little bit different, but these letter and map amendment and consulting type situations where we're guaranteeing that the project's going to be approved by FEMA, or we're guaranteeing that the insurance carrier is going to approve the solution that we've proposed. That is where we're going to then, be able to invoice upon success. So, going in, you're not really on the hook for, anything if we're unsuccessful. And that's because we do our due diligence, so diligently in the beginning. Once we get to a qualified solution, we're 99% successful in the execution of those projects. So that's why we're comfortable, putting that guarantee on the projects. The development projects are a little unique, just because we have a lot of upfront costs with those. So, we may phase some of the cost structure on those. And, the pricing is very unique to each project. But like I said, it's generally relative, to the savings and the value that we're creating. And you'll know all of that up front after we do our initial review. And it's up to you what you choose to do, from that point forward. So I'm going to, let's see, I'm going to go ahead and put our contact information up here, and then I'm going to go to the Q&A and see if there's anything I haven't answered. Move through the time pretty quickly here, which is great. So we'd love to have a conversation with you. So we're prepared to give a Starbucks card to anyone that books a meeting. We'll have a virtual coffee date. And we'd love to have a conversation. You can scan the QR code. It'll take you to our Calendly link. You can book a time, and we'll find someone on our team that's available to host the meeting. Again, just learn what's unique about your scenario, what problems you may have seen with the flood zone, or maybe a current property that you own. Maybe discuss with you how this can become a strategy for your acquisition team. Because once someone works with us one time, this dramatically changes their underwriting strategy. It changes the way they look at flood zone properties. And it does force them to kind of go back through their portfolio and say, hey, did we have a situation like this that we've been paying for years? Maybe we can, find some savings. We can't go back in time, unfortunately, but, we can find something that you can, put in place today. And then developments are the same. You may have, some land that you're looking to acquire. You may have some different projects that are in your pipeline. I know development took a little bit of a delay or a little bit of a halt the last few years, but we're starting to see that market pick back up quite a bit. So like I said, we'd love to have a conversation. If we can't help you today, hopefully we can help you in the future. If there's any insurance brokers or lenders or anyone within the real estate industry, just the same. We have different strategies that definitely can be used in different scenarios. So we'd love to share that. So again, just kind of reiterating, you're welcome to send an email if you don't necessarily want to, or don't feel you need to set a meeting immediately. There's info@National Flood Experts. And then if you have a property that you'd like us to review and you want to send that in right away, again, the documents we're typically looking for, flood insurance declaration pages. This helps us, from the consulting review, but also helps us understand what your, lender's requiring. So you may have primary flood, you may have excess private flood that's required as well. If you have elevation certificates, topography, site maps, all those things, so that we can just reference as many different pieces of the property as possible to kind of figure out which solutions may work. And we've got additional case studies, testimonials and things at our website as well. So, I'm going to open it up here again. I saw, someone raise their hand. I can't actually engage with you during this setup of webinar, but if you have a question, please add it to the Q&A, and I will be happy to answer that. So one of the questions we received was about asset classes that we work with. We do predominantly commercial projects, but we absolutely can help. We've done single family portfolios, even a single one, duplexes, quadplexes. I mean, the solutions that we're talking about, they really apply to any asset class equally. Now, we do see certain patterns across certain property types, certain things we see, in like the multi-building garden style type properties or self-storage, mobile home, manufactured home. Same for industrial, commercial, office, retail, hotel, condo. If you can imagine an asset class, we've done a project on it, to date. And, the great thing about this is, again, even if you've had somebody look at this before, like maybe you're thinking like, yeah, I had a surveyor or I had an insurance broker. They told me they looked at this. Way things change in time. We did a project just the other day, in fact, for a client that we'd worked with in the past. We happened to be revisiting some things while in conversation, for a new property that they acquired. And we said, listen, we're going to go back through your portfolio and just see, if there's anything additional within the last few years that's changed that might be of value. And in fact, we went back and there was one of their properties that we couldn't help before, but now in a second review, we were able to remove a dramatic number of buildings from the flood zone, and it was, well over $100,000 savings. So, again, it's one of these things that the flood maps are dynamic. There's different reasons why we might find a solution today that we didn't find in the past. But I hope that this has really changed your mindset. I hope you learned a few things, that lender requirements can be removed. Insurance policies on the flood can be, improved on the pricing, developments. Maybe you have solutions that at the surface, didn't look to be possible. And, hopefully this is helpful too. If there's anyone that is going to be refinancing this year, I definitely encourage you, to book a meeting, because this could dramatically help the proceeds of your particular refinance. We have had cases where, they were having to bring capital to the closing because, as we've all seen, a lot of the values have been upside down, given the interest rate increases that we saw in the last 5 years. So we had situations where we were able to eliminate the flood insurance requirement, and it was substantial enough to basically make the refinance neutral from a cash in standpoint. And maybe in your situation, it makes it to where it's a larger cash out refinance. That was obviously what we had a ton of in 2020 and 2021 before the interest rates took a turn. So it's really about figuring out what's your particular situation, what solutions are possible, and, working in conjunction with your insurance team. There could be some options that your property insurance has where it might include more coverage for flood if you're not inside the 100-year flood zone. And so then that might be that you no longer need to buy down the deductible, because now you may be in a situation where you can choose to use the property program as your flood coverage and then realize the cost savings, from no longer having that primary layer. So again, these situations can get, very unique, very complex. That's why, kind of working around all the disciplines makes it to where we help get to the maximum solution. So I'll give it another, 30 seconds here if anyone's got an additional question that they would like to add to the Q&A. So let's see. Somebody wanted me to just go back through our process just one more time. So everything starts with the complimentary review. Like I said, we want to get some of these documents that we have here. It takes our team usually about 2 to 3 business days to go through a property and really figure out what solutions might be possible. So once we've identified what solutions look to be a possibility, then it's figuring out, do we have enough data right now? Do we need some additional data from the property to help us maximize the solution? Because, it's not uncommon that we might look at a garden style property with, say, 20 buildings. We find a solution immediately for, like, say, 10, but we think there could be a chance to then also help more of the other 10. And so when going on site, helps us to be able to build a stronger case, in our engineering to qualify more buildings for whatever the anticipated solution might be. And then after we have gotten to the end of the review, we have a definitive solution. That's where we'll discuss the proposal, for what the cost of the project would be. And then you choose if it makes sense to, move forward. We put our guarantee in place in the agreement, execute everything up front, and then invoice on the backside after success. This has worked really well. Like I said, we've done thousands of projects, to this date. So, I trust that you have a great experience and look forward to talking hopefully with many of you. Let me do a quick the Q&A again. What type of properties make for obvious candidates? You know, it's a really good question. We get asked this a lot by like acquisition teams, like, hey, where are the diamonds in the rough? And what we have found, at least in my 8-year experience, is that we have to look at every single one uniquely. I think there definitely is a bias probably to newer construction, things that were built probably later than 1980, because the flood maps didn't really come out until 1975-ish in most parts of the country, even later into the mid 80s in other parts. So things that were definitely built after the flood zones were created, we probably find more solutions, but that's a very general statement. I mean, we've found solutions on things that are right next to a river, right next to the ocean, things that are right smack in the middle of, New Orleans, believe it or not. So we definitely do a tremendous amount of multifamily projects, probably the highest vertical that we qualify projects. But in reality, it's a tough question to say who makes an obvious candidate because we might not find a flood zone solution, but we might find an insurance consulting solution to help lower your premium. So we really have to kind of go in, neutrally to every property. And that's why I always say, if you have a property that has a flood insurance requirement, you are in the best possible situation, having a team like ours review it. So I hope this was really helpful. Thank you for all the questions. Thank you for everyone that stuck around and, look forward to sending out hopefully lots of Starbucks cards for all the meetings. Look forward to meeting a lot of you. You may not talk to myself, could be one of our team, but, equally knowledgeable to see what we can do, to be a great help.